Ladies and gentlemen, good day and welcome to the Steel Exchange India Limited Q1 FY26 results conference call hosted by Kirin Advisors Private Limited. As a reminder, all participants' lines will be in listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand over the conference over to Ms. Sakhi Panjit Yara from Kirin Advisors Private Limited. Thank you, and over to you, ma'am.
Thank you. On behalf of Kirin Advisors, I welcome you to the conference call of Steel Exchange India Limited. From management team, we have Mr. Suresh Kumar Bandi, Joint Managing Director, and Mr. T. Brahmaya, Chief Financial Officer. Now, I hand over the call to Mr. Suresh Kumar Bandi. Over to you, sir.
Thank you, Sakhi ma'am, and thank you for giving me this opportunity to speak to my people over there. Good afternoon, everyone, and thank you for joining us today for the Q1 Financial Year 26 earnings conference call on Steel Exchange India Limited. It has always been a pleasure to speak with all the progress of the business, looking ahead of the new financial year. We are pleased to report a strong start of financial year 26, highlighted by a remarkable 296% year-on-year increase in net profit alongside robust growth in total income and EBITDA. The first quarter has been encouraging both operationally and strategically. It reflects the growing strength of our integrated business model and the sustained trust in our products, especially our flagship brand, Simhadri TMT. Our positioning in the southern market, especially in Andhra Pradesh and Telangana, continues to deepen, and we are seeing our brand increasingly preferred in high-value infrastructure projects. During the quarter, Simhadri TMT rebars were approved for two significant development projects in Andhra Pradesh, that is the Machilipatnam Port and Moolapatra Port. These approvals reinforce our standing as a reliable and quality-centric manufacturer and validate the product confidence that institutional customers have placed in us over the years. We are also happy to share that Steel Exchange India Limited has been awarded a contract valued up to 210 crores by RINL for the conversion of 1.2 lakh tons per annum of billets into Vizag Steel TMT bars. This contract strengthens our regional engagement and adds meaningful volume visibility going forward. In line with our strategy to extract value from non-core assets and streamline business verticals, we incorporated a wholly owned subsidiary, that is SCL Infra Logistics Limited, in June 29th this year itself, 2025. While the company is yet to commence operations, its formation reflects a forward-looking move to organize and grow infrastructure and logistic capabilities within the group. Now, turning to our financial performance for the quarter, we reported a total income of 304.95 crore in Q1 Financial Year 26, and marking a year-on-year growth of 14.53% compared to 266.26 crore in the same quarter last year. The increase was supported by healthy execution, low raw material prices, and customer demand. EBITDA for the quarter stood at 36.35 crore, reflecting a year-on-year growth of 32.66%. Our EBITDA margin improved by 163 basis points, rising to 11.92% from 10.29% last year. Net profit for the quarter came in at 10.23 crore, significantly higher than 2.58 crore reported in Q1 Financial Year 25, representing a growth of 296.3% year-on-year. Correspondingly, our net profit margin improved to 3.35% from 0.97%, an expansion of 238 basis points. As many of you know, our operations are anchored by our integrated steel plant located near Visakhapatnam, which houses sponge iron, billet, rolling mill, power generation facilities, along with railway sidings completely. So this enables us to maintain full control across the value chain from raw materials to finished TMT bars, and ensures we are well positioned to manage cost and cycles and deliver consistent quality. The brand equity we have built around Simhadri TMT remains one of our strongest assets. Here, our products have been used in defense-related construction and several projects of national importance, reinforcing our credibility and long-term focus. Looking ahead, we remain watchful of evolving market conditions. Our outlook is positive. With improved visibility on institutional demand, stable operating metrics, and a growing emphasis on infrastructure development across India, we are confident in our ability to build on this momentum over the coming years. Before I close, I want to thank our teams on the ground, our partners, and most importantly, our shareholders and stakeholders who continue to support us. We are proud for the work done so far and are excited about what lies ahead. With discipline, agility, and customer focus, we aim to deliver another year of consistent and meaningful growth. Thank you once again for joining us today. I now look forward for you to ask your questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star.
I will ask Brahmaya Garu to reply to these questions. If anything is there, I can add up on that thing. Now you can ask, madam.
Sure.
Okay, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Madhur Rathi from Counter Cyclical Investments. Please go ahead.
So thank you for the opportunity. Sir, I wanted to understand what is our current capacity utilization and capacity utilization level currently.
So I would like to see, we have 3 facilities in this integrated plant. Rather, I can say 4 facilities. Okay. So sponge, our SMS plant, and rebar. So SMS plant, we have a 2.2 lakh tons capacity, and the current quarter we have used it up to 89%. And whereas the SMS and the rebar, so we have recently increased our capacity. Earlier, it used to be 2.5 lakh tons in my SMS plant, which has become now 3.62 lakh tons now. And even my rebar also, it was 2.25 lakh tons, which has been increased to 3.57 lakh tons now. So with this, after the increased thing, which has added only at the fag end of March only, in the first current quarter only started operating the additional capacity. So though our volumes have gone up compared to the previous years, but percentage it has come down slightly compared to my previous thing. Currently, we are done at my SMS at 55% and the rebar mill at 43%. So this will be
rebar at 43%. Sorry, sir. So rebar at 43%, right?
Yeah.
Sir, so I wanted to understand, sir, what is our EBITDA per ton currently, and sir, with this RVNL order and better operating utilization of our plants, sir, where do we expect it for FY26 and FY27 EBITDA per ton? And sir, what is the volume growth that we can expect for FY26?
My EBITDA per ton is around 6,660, so more than 6,600. We are expecting this will go further once we increase our volumes more, capacity utilization more, because of the fixed cost absorption on the more production. So now you're talking about the capacity utilization outlook for the going forward. Yeah, we have With respect to rebars, it will be going once we implement, because we already got one conversion order from RINL, Rashtriya Ispat Nigam Limited, which is called Vizag Steel. So we have got 1.2 lakh tons per annum contract from them for conversion of their billets into their rebars. So by operationalizing that contract, which is likely to be somewhere in December this year, so after that it will go to utilization will go to more than 85-90%. So till then we will be gradually increasing it from the current level to maybe around 60% on our own production, 60-65%. With that additional capacity, it will go to 85-90%.
Okay, got it. So, can we expect for at least Q4 of this year, our capacity should be closer to 750,000 metric ton of volume? Is it a safe bet in Q4 of FY26?
Q4 of 26, my capacity is only 3.6 lakh tons, only 3.57 lakh tons. So we will be operating at 90%, more than 90%.
Got it. And sir, what kind of margin improvement can we expect once we move to those levels?
My margin improvement, there are two things. One is a conversion contract, so that will not reflect straight away on my production thing. But my own production, currently we have 6,600, which will go to around 7,000 plus.
7,500. Got it. And sir, what is the margin? So this only 1.2 lakh ton, but only 210 crore order. So for this conversion order, what kind of margins are we getting, or per ton or percentage wise?
Monthly additional EBITDA, we should get around 2.25 crores. So that means around 27 crores incremental EBITDA will be coming from this going forward on a full year of operation.
Got it. Sir, also I saw that we have one integrated wire complex that we were planning, and so what is the status of that, and when can we expect to see some benefit of that?
You are talking about our future plans about our Bobili site, where we are planning for the integrated wire, which is currently. So there are the site-related some work is going on with the government. So once we complete those formalities, we will take it up maybe in the next year.
Got it, sir. Sir, I'll get back in with you, sir. Thank you so much, and all the best.
Yeah.
Thank you. The next question is from the line of Damodar, an individual investor. Please go ahead.
Hi, sir. Thank you for the opportunity. Could you please elaborate on the newly started subsidiary for logistics company, and what would be the expected operating revenue, and when can we expect profitability from that new company? Thank you, sir. That is my question.
Yeah. So, Damodar, I think you're talking about my monetization plans of our surplus assets. So we have around 200 acres of surplus land. Totally, we have 400 plus acres of the land, which is within the limits of Greater Visakhapatnam Municipal Corporation. This is so. In this 400, even if we take our future requirement to make our existing capacity to 1.5 million ton capacity, so we need hardly 200 acres. So another 200 acres are a surplus land, which the management is planning to monetize it by operationalizing it to different suitable businesses. One of that is the logistics. So because being Visakhapatnam is going to be a logistics hub, as there are two major ports operating and one more major port is also under development, which is going to commission shortly. So this is going to be a very big hub for the logistics, and our site is very much suitable, and maybe we are uniquely placed in that way, because having railway sidings, own railway sidings with nearly 100 to 200 acres of land adjacent to the railway sidings within that city limits, and only 20-30 kilometers far away from these ports, current two ports, and also just 2 to 3 kilometers away from the express highway, which is being constructed as an under Bharatmala, will be getting operationalized by end of this December or maybe early Jan 26 thing. So with this, we wanted to operationalize these railway sidings by converting into GCT and also using our surplus lands as a stockyards for this logistics business. So we are targeting only on the logistics business around 14-15 crores of net profit minimum. That by my model I am right now talking is only leasing it and these things to the thing. Suppose if I do on my own, it will be more profit will be coming. So we are exploring whether we'll get a suitable partner, a right partner to make it as a JV, or whether we make it as a lease basis, depending upon finally what model we are taking up. Minimum of around 16-17 crores will come. It will go further up to 30-35 crores also profit-wise yearly, additional.
Thank you, sir. So one more question regarding your fundraising. Last year you took an approval for 600 crores, right? So any updates on fundraising and equity, right?
Yes, we have taken the approval. We are working on now currently on the rights issue. So maybe shortly we may be coming out for the rights issue. Up to our plan is to make it subject to approvals from the various competent board and all. That is the first step. And regarding the other fundraising, yes, it is not fundraising in that way. Maybe we want to get the existing high-cost debt with refinanced by the low-cost debt. So we are working on that also. We already got a term sheet from a lender. We are now trying to close that at the earliest possible.
Thank you, sir. That's it from my side, sir.
Thank you.
Thank you.
Thank you. The next question is from the line of Rajiv Maheshwari from Praj Investments. Please go ahead.
Hi, good afternoon, everyone.
Yeah, good afternoon.
Good afternoon. Yeah, I have a question is, what is the current debt in the books of the company, and what's the debt plan for the debt reduction on the same?
Currently, we have 340 crores outstanding. And the reduction plan is that once we complete this rights issue, so we are planning to utilize around 75 crores out of the rights issue for repayment of this debt. That is the immediate plan. How do we reduce the debt from the existing levels? So, in addition to that, whatever our regular payment, which will be also reducing going forward the debt levels.
So as of now, you plan to utilize 75 crores from the right issue, and then it will be an ongoing process.
Yes.
And
sure.
I also observed that we have 100% of our promoter shares as pledged. So what's the plan to get release of these shares, and how long would it take?
So these are mostly pledged to the lenders or maybe to some our material suppliers. Okay. So these slowly we will try to reduce it going forward, but not immediately. It may take some time. Maybe around once we repay this debt and also once we reduce these levels, then we can negotiate with them and then get those released.
Okay. How is this market? The results were very good for the 31st June quarter. How do you see the current market in the July and August season because of the monsoon and all?
Generally, for steel industry, Q2 is a bit lull period because of what you rightly said.
Yeah.
So we are hopeful this year may be better because the current year Q1 the monsoon came so early. It became mid of the May itself.
Yeah.
So because of that early monsoon, we are expecting, if any, in between the Q2, if we get some good summer type of thing, like good relief from the rains, anything, then it may pick up. Otherwise, normally, I agree with you, it is a lull period only.
Okay. And one final question is regarding this SIL Infra and Logistics. By when can we expect it to be operational in terms of generating of revenue and the profit expectation timelines?
So we are expecting this, the generation of additional revenue on account of this from Q4 onwards.
Okay.
And in fact, we had entered one a strategic agreement with another big player in this logistics in terminal. There's a triparty agreement. Who is our associate partner already in a group company. Now we are entering this new agreement to take it forward. We are going to weigh various options along with their expertise. How do we put this best use of these things?
Okay, right. Just in the previous question, you had mentioned about 400 acres of land. So I couldn't get it. So you plan to use 200 acres out of it, and the balance 200 remains unusable, or what's the idea to use this big amount of land parcel?
Yeah, so the 200 acres is sufficient to run my plant, including my future expansion. So balance 200 surplus, out of that 100 acres, along with my railway sidings, and then there is a 1.6 lakh square feet shed, huge shed. So all that we want to use it for my logistics business. Another 100 acres, we want to do it on a different model, like it is a development of logistics park and also residential park and also the affordable housing. We have a different plan how to monetize on the real estate point of view.
Okay. So will that be also part of the SIL Infra and Logistics, or it would come separately?
As of now, we are thinking that both the verticals will want to bring it on the SIL Infra only.
Okay, right. Okay. That answers my query. One quick update. This 400 acres of land, what's the value we are showing in the balance sheet right now?
Balance sheet value will be very less because this is.
And what's the current market value, a rough figure?
Current market value will be around, per acre will be around 1.2 to 1.5 depending upon that area, because it's a huge land, no?
Okay, so should be around 500 to 600 crores.
Yes.
Okay, right.
So when you convert, Brahmaya, the valuation will be around 4 to 5 crores. When you convert the land parcels into smaller bits by putting roads and all that. So we are only trying to monetize by giving a larger valuation for the unutilized land parcels. Okay, so that's what we are trying to do in this.
Yeah. As of now, since it is before conversion, it's around 1 to 1.1 crore. Once the conversion and all is done, then the value addition would enhance.
Yes, will be there.
Okay, right. Thank you so much. That's all from my side.
Thank you. The next question is from the line of Madhur Rathi from Counter Cyclical Investments. Please go ahead.
Sir, thank you for the opportunity once again. Sir, I understand that out of the 400 acres land, 200 will be utilized for our steel plant expansion. So this 14-15 crore leasing net profit that we are expecting from Q4, how much land are we planning to lease out to them?
That will be of the 100 acres.
Okay, so for the 100 acres, we are getting 14-15 crores net profit. And sir, you mentioned that the rest 100 acres, we are planning to build terminal or some kind of logistics park. So do we have any idea of what kind of investments will we planning to make, or is it very early to comment on that?
Here also we are planning to make it as a development either directly under SIL Infra or maybe through a joint development agreement with whoever is having rich experience in this real estate. Because for us we have not done any real estate by the company, but though we have a group companies who are there for more than 2 decades who has experience in this real estate. So if we go on the joint development mode, we will be getting our share and the developer will get their share. So maybe as our JMD so mentioned that, okay, on average per acre, we should be getting around 3 crores total value. Out of that, our share will be getting in this.
Okay, so 3 crore for the remaining 100 acres once it's developed.
Yes.
Basically, the state government of Andhra Pradesh is promoting the multimodal logistic park, and they're incentivizing the businesses in Andhra Pradesh in a large way. So there we wanted to take advantage by setting up this multimodal logistic park and these things, because this is in the vicinity of Visakhapatnam and port vicinity, as Ramesh has explained. So these are all new, so that you can get larger revenues out of the unutilized land parcels. The main this thing is there.
Got it. Sir, on our debt, so this 340 crore debt that we have, so what is the current interest cost? And sir, we mentioned that we are expecting some kind of refinancing. So what is the interest cost reduction can we expect from that?
Currently, we have 18.75% rate, which we are looking at. We have got the term sheet for 13.25 in the first year. Later, once we complete 1 year, come down to 12%.
And sir, this 13.25, sir, from which quarter should this help us?
It should help us from third quarter, because now we are expecting the disbursement will happen in this quarter. So you can see that any contribution from that reduced interest will be reflected only in third quarter.
Got it, sir. Got it. Sir, I think that was from my end. Sir, yeah. Sir, that answers most of my question. Sir, just a final question, sir, on the wire complex that we are planning in FY27. Sir, do we have any idea of what kind of investments are we would be required?
Can you please repeat the question? I missed
Yeah.
it.
Sir, on the wire complex.
That question.
Yes, sir.
See, this is in a premature stage. Right now, see, those land parcels, which are the additional land parcel at a different place. This wire complex which we are contemplating to build. So once this right issue and all things go, and we are having sufficient funds, then we look at it for a future business opportunity that is in the wire line. It will be more or less like a downstream activity to steel exchange. So, and roughly around 100 crores will be the investment which will line up in that thing. It will be purely galvanized wires and wire products, which will be for mainly for export purposes, like nails and all that. So these are all right now we are kept on hold due to some issues in the land side with the government, where we are trying to resolve and move forward.
Got it. Sir, just a final clarification, sir. This 13.25% of interest cost that reduction that we are expecting, sir, this is regardless of our rights issue is subscribed or not, right? Or is there a contingent that... Okay, sir. Got it.
No. Basically, rights will only help us in reducing our debt further, mainly.
Okay.
Because even this debt also, once we start having enough revenues, we will be certainly looking at bringing down the debt considerably. So that's the reason we have set up the unutilized multimodal logistic park and all that. So drive in extra revenues, which will help us in reducing the debt of the company. And it becomes a debt-free company in coming times. That's the whole reason.
Got it. Sir, just a final, bookkeeping. Sir, what were the steel volumes of TMT and billets that we manufactured and sold in FY25 and FY24?
So, okay, FY25, FY24, I think we have 1.65 plus 1. 2.1, if all three facilities put together, we have manufactured more than 4,20,000, around 4,20,000 tons in FY25.
And sir, what would be that number for FY24?
I need to check. Not readily available.
Okay, sir. No
It will be
problem.
more or
I'll
less
get
in the
it
same
to you.
line. But this year, because of additional capacity adding and all things, it will reflect in the coming quarters. So naturally,
Got it.
everything will go up.
Got it, sir. Sir, just a final question from me. Sir, for FY26, sir, what is our outlook for top line and bottom line? Sir, what kind of revenues and EBITDA should we expect on an overall basis, considering these improvements that happen?
Our top line, we are expecting between 1,400 to 1,500. And EBITDA, we are expecting between 170 to 180.
Sir, that was from mine, sir. Thank you so much and all the best.
Thank you.
Thank you.
Thank you. The next question is from the line of Rajiv Maheshwari from Praj Investments. Please go ahead.
Yeah, thank you once again for having my question. This time the net profit margin has shown good improvement compared to the last quarters. So what brought around this improvement, and going forward, do we expect to improve it further in the coming quarters?
Current quarter, there's a mix of reasons for this. One, we have more volume we have produced, number one. Number two, our raw material prices are a bit easier, maybe under control. So third, one is that we have got some additional other income which has also helped us to report this growth. So the other income may not be repeating it. So that's around 4.5 crores. So if you remove that, others we should be able to sustain it.
So going ahead, we can expect an improvement with the increased volume?
Yeah.
Yeah, it will be. Well, in a year, you can. If you look at quarter on quarter, yes, another colleague of ours that mentioned that Q2 may be bit lull period and all, but on a yearly basis, yes, we'll show improvement.
Okay. And one final question from my side. Would like to congratulate you on owning the teams for the Andhra Premier League, that's Samdhari Vizag Lions, right?
Yeah, that is mainly as a brand promotion. Simhadri Vizag Lions.
Yeah.
Because Simhadri is a premium brand in Andhra when we manufacture the steel.
Yeah.
So it is a business decision which was taken.
Yeah. So basically, this Premier League would give a more branding and more of a viewership and more product brand awareness to the region of Andhra Pradesh and Telangana.
Yes,
all the best from my side going ahead in future. Thank you.
Thank you.
Thank you.
Thank you. The next question is from the line of Vinod Shah, an individual investor. Please go ahead.
Hi, sir. Good afternoon.
Good afternoon.
Yes, sir. So I just have two quick questions. What was the average capacity utilization at Vizag plant during Q1?
My capacity utilization is around different facilities, different percentage. One is at 89%, another one is around 45%, another one in between. So if you take average, it will be around 60%, but my final rebar is only 40%.
Okay, sir. And second question is is there any scope for a brownfield expansion or a capacity optimization in the existing plant?
At a later.
Yeah, there is a large scope for expansion in the existing plant because this is having all the required land, power, railway sidings and all that. So we can easily go up to additional 1 million ton in the coming times. So with a very low investment, you can just make it a 1.5 million ton plant. So that will be coming times once we become a debt-free company. Mm-hmm. Then we will think about moving into the expansion mode.
Okay.
For special steels.
That's all from my side. Thank you.
Yeah.
Thank you. The next question is from the line of Damodar, an individual investor. Please go ahead.
Hi, sir. Thank you for the opportunity again. Sir, right now, with respect to equity issue for raising new funds, the stock price is pretty low, right, compared to the valuation we have. So, how soon will you be raising the new funds? That is the one question. I mean, with respect to equity, right? And do you have any party ready for raising new funds? Because the stock price is around 11 or so. And number two is, I mean, this is just suggestion. This is just a suggestion. Because you're doing a fantastic job and the results are excellent. I mean, it's just my recommendation that why can't we do a TV interview like CNBC, TV18 or ET Now or NDTV or Bloomberg Quint, so that wider audience will know about the company developments and it will impact the overall company, and because we are a small cap segment, it will improve the visibility. That's it. These two are my questions.
Yeah.
Thank you.
Thank you for your question. We'll certainly take it up. Yeah, Pramay, I can speak any other things.
Yeah. See, we are planning this rights issue in coming maybe 1 or 2 months. September next month we are planning. And you are talking about is there anybody who has, so we are now depending upon our own numbers. So since our numbers are speaking and we are expecting all our existing shareholders will participate in that. So otherwise, we will see how to take it forward. Okay?
Okay, sir. Thank you. That's it from my side, sir.
Thank you.
Thank you. The next question is from the line of Rajiv Maheshwari from Praj Investments. Please go ahead.
Going ahead with the point which Damodar had pointed out, even I had observed that the visibility in the media channels or the YouTubes or Instagram and all those, the Twitter and all, the visibility is not as per the expectations. So I would definitely second the suggestion that the management team or the marketing team or the product team should be more visible in these social media channels, the YouTubes and all, so that it gives a good insight and knowledge about the company as a whole. Because what I feel is predominantly it's more into Andhra Pradesh and Telangana. But these going through these social media channels gives a good amount of fill-up and visibility to people throughout the country. So it's a very good point Damodar has pointed out, and I would also like to suggest that you guys should be more into interviews, and because even in social media and the YouTube, there are hardly any interviews or anything available from the management or the team. So I think if we can focus more on that, it should be helpful in long run as a brand building as well as a accessibility to the management and their ideas.
Yeah, certainly we'll take this up, and we'll certainly, we also want to build as a national brand, because Steel Exchange India Limited was a software company when it started, and they started into steel and then went into manufacturing. Now also in e-commerce and all that. There are a lot of things which predominantly which have not come out. In coming times, you can see the visibility of the company, and this will certainly help all the investors who have been with us and invested with us. So we will be working for their betterment.
Yeah, it will create value for investors, and with visibility, even the volumes and all. Today also on the stock exchange, the stock is doing very good with a very heavy volume of 3.5 crores. So it was heartening to see that in this falling market also Steel Exchange has been performing so well. So with a little bit of more visibility, because I believe there's a lots of potential in the company to grow. It's only little bit of branding and the visibility in the social media that should again help, at the two potential for the shareholders' value is again.
We'll take all your this thing, and we'll certainly live up to the expectation of our investors and the stakeholders.
Thank you so much.
Thanks.
Thank you. The next question is from the line of Bhakti Vora from Unity Finance. Please go ahead.
Hello.
Hello.
Hi, good afternoon, sir. So can you share some details on working capital movement this quarter? Like, have receivables or inventories gone up meaningfully? Hello?
Yeah. So I think you know very well about the steel industry, which is very capital intensive and working capital intensive. So our working capital also, it has gone up slightly compared to the last quarter. So my receivables and my creditors. But if you look at all these working capital, whatever is my net working capital of more than almost 300 to 400 crores, but it's funded by internal because my existing limit for the working capital is only 50 crores from the bank. Out of that, 10 crores only fund based, 40 is the non-fund based. So now going forward, we are now going to increase the working capital limits also. So that we will have better leverage to play with the market situations with the improved working capital limits. That is the thing.
Oh, thank you.
Thank you.
Thank you. The next question is from the line of Chandresh Singh, an individual investor. Please go ahead.
Yeah, thank you for the opportunity. So, my question is, are you exploring any new product grades or variants under Simhadri brand for high spec applications?
Yeah. Here, what I tell you is that we are all engineers basically, and we are more quality-oriented people. So when we develop it, we are the first people to develop all the defense grades such as CRM materials and all that. And it goes mainly into the defense segment, and it is priced at a little higher this thing also. Even though we make TMT V-bars, in TMT also some special steels are made out of it. So we'll be exploring all the opportunities and the requirements of the markets. Depending upon the need base, we'll be doing those things. And certainly, since we are all, from day one, we are all quality people, so all the quality standards we'll like to improve further also in our systems.
Yeah. Already we have, I think sir is telling that we have one specialized product which goes to our defense projects and all across the country. So we are selling it in many states. Okay. So, and we are going to look such products going forward at later stage. But as of now, we have one product which is not all others are producing it.
Okay. Thank you for answering that, sir. That's all from my side.
Thank you. The next question is from the line of Madhur Rathi from Counter Cyclical Investments. Please go ahead.
So thank you for the opportunity once again. Sir, if I look at our working capital like a previous participant was asking, sir, our inventories have jumped by 50% between FY21 to FY25, and our receivables have grown 4x from 55 crore to 192 crores, but our revenue is flat. So why is that, and what are we planning to take this under control?
So if you look at in the last, the period what you are referring is subject to so many unexpected events happening like your corona and all these things. And when you want to push the sale, irrespective of these market conditions, you have to give more credit. So in that way, it has built up. So maybe once we that market conditions are coming in, there are cycles, okay, where the buyer's market and the seller's market. When we are slowly going into the seller's market, we will put restrictions on the existing debtors to make their payments first, then only we will supply it. So we are looking for that. I think this is going to happen shortly in Andhra because of the huge projects taken up by the state government and also private industries are coming up. Many such are going to launch going forward. So we are expecting that buying market in the Andhra Pradesh where we can take advantage and then reduce these levels.
Sir, so if I look at our working capital days, sir, so like over the next 1 to 2 years, sir, where should this stabilize, sir? Can we expect it to be 2 to 3 months, or is it too much to like it's a very broad expectation?
Going
forward, working capitals, whatever are there, they're all market-driven conditions which happen in steel industry. Because, and it is the purchase of the raw materials depending upon the market prices. When it falls, you capture more raw materials, and similarly, when the markets are down and all that, you will build some inventories in the market. And once the markets move up, all the inventories are just liquidated, and you capture more raw materials at that point of time. It's an up and down of the raw materials which will dynamically, depending upon the market conditions, we purchase and do that thing. And ours is a large plant. It is almost a 4.4 million tons plant. And the inventories what we are holding are very, very on a major side only, the size of the plant, because we have to bring our inventories of iron ore 3 months ahead, because even though we book and bring, they come singly, and one, sometimes it takes a lot of time. So we keep an options from different players like pellets, iron ore, even coal. We buy from imported coals and all that. So there are timelines, and so we have to hold inventories. When the ship comes, so it comes with a large capex vessels and all that. So we have to keep that inventories and we average out the inventories. Similarly, the finished products, whenever the markets are very, very good, then your inventories become negligible in the finished side. So this is this 3 months, 4 months, it will be there, this fine. When the markets move up, it depends, it goes away. So this
Got
is
it, sir. I understand on... Sorry, sir. Please go, sorry.
नहीं, इसमें बस यही बोलना था, बात करिए आप.
हाँ जी सर, इन्वेंट्री का तो मैं समझ गया कि हम वॉल्यूम हमारा बढ़ रहा है तो इन्वेंट्री तो बढ़ना ही चाहिए. बट सर ट्रेड रिसीवेबल का समझना सर ये कब तक कम हो जाएगा? हमें लगता है कि हमारा जो
ट्रेड रिसीवेबल कम होता है. ट्रेड रिसीवेबल एक ऐसी चीज है जब मार्केट ड्रिवन होती है. ये जितने भी प्रोजेक्ट कस्टमर्स है उनके पेमेंट साइकिल्स के ऊपर डिपेंड करता है, मार्केट कंडीशंस पे डिपेंड करता है, डिस्ट्रीब्यूटर्स का स्ट्रेंथ पे डिपेंड करता है. अगर मार्केट कम है, अब जैसे मार्केट आपको 50 से 45 हो जाती है तो वो एवरेज आउट करके लेते हैं, वो धीरे धीरे कम होता है. सो देयर इज रिसीवेबल्स भी कम होते जाएंगे. जैसे जैसे मार्केट इम्प्रूव होते जाएगा तो निकल जाएगा पूरा रिसीवेबल्स.
Got it, sir. So just a final question, sir. How is our raw material sourcing, sir? Do we have any long-term contracts for iron ore or coal, or how is our sourcing, raw material sourcing?
We are having that raw material contracts with NMDC for iron ore, the lumps and all that. And with around 4 lakh tons, I am having a contract. It comes through this railway lines itself. Similarly, we are having coal contracts also with Mahanadi coal fields long term. But individually, we have got a port based very near to us. So a lot of shipments of coal and all things come. So depending upon the market conditions, like scrap is there. We buy locally and we buy from imported scraps. Depending upon the market conditions, we buy these things. So we are fully secured as far as the raw materials are there. So we don't have any challenges in procurement of raw materials.
Got it, sir. Sir, that was from my end, sir. Thank you so much and all the best.
Yeah.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand over the conference to Ms. Sakhi Panjiyara from Kirin Advisors Private Limited for closing comments.
Thank you everyone for joining the conference call of Steel Exchange India Limited. If you have any queries, you can write to us at research@kirinadvisors.com. Once again, thank you for joining the conference call. Thank you, Suresh sir. Thank you, Brahma sir. Have a good day.
Yeah. Thank you. Thank you, everybody.
Thank you all for your presence. Thank you, friends.
Thank you. Thank you.
Thank you. On behalf of Kirin Advisors Private Limited concludes this conference. Thank you for joining us, and you may now disconnect your lines.